Gas stocks, MGL and IGL correct after the government keeps APM gas prices unchanged till further orders. The street was expecting Kirit Parikh committee recommendations of a price hike to be accepted by the 1st of April.
Mixed March for automakers. Maruti records its highest ever annual sales in FY23, coming in at around 19.7 lakh units. Tata Motors reported flat year-on-year growth, while weakness in exports hits the sales growth for TVS Motors.
Which is over 2.5% after it completes the hive-off of its cargo and logistics division, Spice Express, into a separate entity. Company says this will result in a one-time gain of over 2,500 crores.
Big auto wins boost a couple of stocks. RVNL secures a letter of award for project worth around 1,200 crores. Tejas Networks as well backs a 696 crore rupee order from BSNL, while Ashoka Bilcon secures a project for 285 crores from the railways. Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me today is Ekta Batra. Well, Ekta, it's a quiet start to trade. The mid-cap index still doing pretty well, but good to see some consolidation after the kind of run we saw in the previous couple of sessions.
Hi, Nigel. Yes, absolutely. You know, it's a bit of a quiet session. Most of the people are probably taking advantage of the multiple holidays that we have. So, yes, the mid-cap index is up around 0.3% at this point in time. We have the Bank Nifty, which is absolutely flat. But there's a lot happening underneath the surface in terms of specific stocks. So, may it be your gas stocks or may it be your auto stocks. There's a lot of news which is driving specific sectors and specific stocks in today's trading session. But let's kick off the show with the company which we have on board. Ather Industries has been in focus in the past couple of trading sessions as it's entered into an agreement with Saudi Aramco Technologies for its converged polyols product series. What is the revenue potential? What does this particular deal mean? And to tell us the outlook for the business as well going ahead, we have Aman Desai, who's the founder and director at Ather Industries, joining in this morning. Aman, hi. Thank you very much for taking the time out. If you could just simply start by telling us about the tie-up that you have with Saudi Aramco Technologies. What would it mean in terms of a tie-up, one, and two, the revenue potential, and when does it kick in?
Hi, Ekta. Good morning. Thank you for having me on the show. We're very excited to announce the signed letter of agreement with Saudi Aramco, and we have been talking about this for the last couple of years, and we did our IPO last year, and they were in fact one of the customers that had given us consent to publish their name as our customer. And so we have been working with them on the development and the upscaling of the commercialization technology and process to manufacture these converged polyols. These are very interesting and exciting polyols, which are potentially very sustainable polyols containing up to 40% carbon dioxide by weight, which we're targeting in the case industry, so the coatings, adhesives, sealants, and elastomers industry. And so, as a next milestone of the collaboration that we have had with Saudi Aramco over the last few years in developing this technology, is this important milestone that we just signed the letter of intent for, which is the finalization of the licensing agreement, which allows us to keep on manufacturing this polyols in the future. And we have defined the next set of milestones, which includes a potential commercial launch with another partner in the case industry, where we will be incorporating this technology as the process to manufacture the polyols, which will be used in this new product launch by this another partner that we will announce in due course.
Hi, Aman. Good morning. Thanks so much for joining in. So you're saying this letter of intent with Saudi Aramco Technologies that you have signed, that's as good as finalization of an agreement, or do we need to wait for the finalization of agreement date?
Nigel, good morning. Nice to see you again. It is as good as finalized.
Okay.
So the letter of intent basically summarizes the intent, and the agreement is finalized, which will be inked in a month's time. So it is as good as finalized.
Okay, clear that then in terms of finalization of the deal. What is the revenue potential, though, you could get basis this letter of intent, finalization agreement, maybe in year one, and how does it scale up in the coming years?
Yeah, thanks, Nigel. It's a good question. I was expecting this question. Unfortunately, I cannot answer that question because, large multinationals, the confidential confidentiality is key. We are going to announce the product launch with this yet another partner. So it's going to be a three-party joint press release that will happen in a couple of months' time now with a production launch. And this is obviously, if you know anything about the case industry, coatings, adhesives, sealants, and elastomers, it's a 11 billion kilogram industry, 11,000 KTA, out of which we are targeting 1,001 billion kilogram or 1,000 KTA target of differentiated and performance polyols, and these will be sustainable in nature. And so the market potential is significant. We need to wait and watch and see how it works out,
Sure.
but we are very excited and looking forward.
Analysts are estimating around 200 crores in terms of a revenue potential from this deal, possibly peak sales annually. I know you can't give exact numbers, but is that a fair assumption?
I truly cannot. I don't know how that analysts, that number was released by the analysts.
Okay.
But,
all right.
Let's live TV.
Let's talk about the earlier long-term supply and sales agreement that you had signed in the month of March, which was with Otsuka Chemical, the Japanese company. Can you tell us where things stand in terms of execution of that particular agreement and the revenue potential there?
Yeah, so I think the revenue potential was mentioned in the LOI that we did was about 50 plus crores per year over those two products in an exclusive manner with Otsuka Chemical in Japan. And as you are displaying on the board right now, I see that we also signed a deal with Polaroid Life Sciences, where we were the exclusive research and development and scale-up partner for them in the film photography area, as well as the life sciences area of Polaroid. And so over the last 3-4 months, we've done Polaroid, we've done Otsuka, and now we've done Saudi Aramco. And this is what we've been promising for the last 6-7 months, is that, we are a differentiated company participating with and partnering with the global innovators across the industry spectrum, pharma, agro, material science, oil and gas. And I think the statements that we are announcing publicly kind of lend good credibility, I think, to those statements that we've been making all along. And it's a very exciting area.
So Otsuka's 51 crores, and from Polaroid, the potential was what, 120, 130 crores? With an upside potential 15, as well.
Yeah, so it was about 100 plus crores, and that was only taking into account the film photography. The life sciences component was not accounted for in the upside potential that we had demonstrated, because it is still unclear, but we are very exciting things already being accomplished in the life sciences area with Polaroid, and we will, in due course of time, hopefully announce the upside potential of that area as well.
Aman, obviously, it's quite obvious that you all are focusing a lot on these tie-ups. There have been 3 just in the past couple of months. What is the overall strategy of the company when it comes to these global tie-ups, and what more can we expect?
It's a very interesting question. We are positioning our company as a differentiated partner for contract research and manufacturing services on the CRAMS business model, where we're partnering with the innovators in their pipeline and going all the way towards commercialization. And so it's a very interesting area. This is the 3 that we have announced. You could imagine we have almost 20 in the pipeline that we are along the same area, along the same lines that we are working on actively in a very advanced manner. So what to expect in the future, I think for sure we should expect additional announcements of this kinds with additional global innovator multinational companies in the industry sector that we are participating in. And so yeah, we should expect more of these in the near future, and we're actively working towards them.
All right, Aman, final question before we let you go. Then, what's it's new fiscal, right? So we're kickstarting the new fiscal. We don't want to know anything about FY23 any longer. Once you report your numbers, we'll quiz you on that. But for FY24, what kind of a revenue growth you're looking at, given the kind of tie-ups that you've done? And margins, I think normally you were guiding for the late 20s, right? Give us a broad guidance for FY24.
Well, the EBITDAs has been 29-30% historically, and that is the guideline that we have always given. The profits have been 20% thereabouts, and that's the guideline that we have always given, and that's the kind of guideline we continue to give. We will look at increasing this in a reasonable fashion. In terms of the new fiscal year, we have the new manufacturing facility starting up, already started, and we'll have contributions from that. We have these tie-ups that we are getting into with these various innovator companies across the industry spectrum. So definitely looking at good positive growth in the current, in the upcoming quarters and the
quantify that, Aman. For sure. Try to quantify that, right? New manufacturing facility, more tie-ups. what's the rough number we should be looking at?
Nigel, thanks. I would love to, but
Mid-teens,
I don't think I should.
Mid-teens, 20%. You've got big capacity coming on. I guess it'll be more than that.
It's a fantastic morning, Nigel. Thank you very much for having me. I'm sorry, I'll refrain from giving some numbers.
We let you go this time, Aman. We let you go this time. But when you join us for your Q4 numbers, maybe you'll give us a better insight. For the time being, we'll take those margins at around 29 to 30% EBITDA margins that you'll have been doing. And you're looking to maintain that and probably work on that. Good speaking to you. Thanks so much for joining in and speaking to us on this particular tire. For the time being, though, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Madhuchanda Dey of moneycontrol.com joins us to talk about a stock that she's tracking closely. Madhu?
Travel is on an upswing and luggage companies are reporting interesting numbers. However, the leading organized luggage manufacturer, VIP Industries, has corrected by over 20% in the past 2 months against 4.5% decline in the Nifty index. VIP, however, has been fast coming out of the adverse impact of the pandemic and showing good traction in revenue. The company had lost market share in the value segment during the pandemic and is now recouping the same. The business model for VIP Industries is changing from trading, that is importing everything from China, to its own manufacturing through its facilities in India as well as Bangladesh. This is a huge boost to margin. Unlike many other categories, luggage is a relatively less penetrated category and has much to gain from tailwinds like travel, bedding, shift to branded products, etc. There is a steady shift from huge unorganized sector, especially in the value category. The stock valuation is at a discount to its pre-pandemic level and at a steep discount to the consumer universe.
Okay, thank you very much for that. Well, for the markets, it's extremely quiet, but we have a couple of stocks which are gaining. For example, ONGC, which is your top gain on the Nifty, up around 3.8%. We have from the auto space, Moto, which is reacting to its numbers, so up around 3% and following suit is Maruti as well as Bajaj Auto. It's a lot about the auto stocks this morning. Take a short break, but up next, we'll be talking to the management of Sheela Foam to discuss the company's business outlook. Stay tuned.
Welcome back. Well, the markets have moved into the red now. So we're down close to around 50 points from, in the last 1 hour or so. So just keep an eye out on that. A couple of stocks that are dragging. JSW Steel is lower. HUL, that's a heavier bait in there. And Infosys as well has taken a bit of a knock. But let's get chatting with the next corporate then on the show. We have Mr. Rahul Gautam, who's the managing director of Sheela Foam, is joining in to fill us in with the outlook for the business. Hi, sir. Good morning. Thanks so much for joining in. Well, the last time you joined us, you said that demand is a little bit sketchy on ground. Could you give us an update? Have things recovered? Is demand bouncing back now, or are things a little bit subdued?
So if I look at the last couple of weeks, definitely demand has increased, and at least the trend and the direction is upwards. So compared to the last time that we met, this is a little bit of a better situation than that.
Okay. So, you all are very closely linked to TDI prices. Obviously, it's one of your key raw materials. As of Q3 FY23, it stood at around 243 rupees per kg, which was lower than what at least we have data for in Q2 of FY23. Where do prices stand as of now? How have they moved? Has there been any kind of rise? And if you could quantify it for us?
Yes, so it is absolutely true that our destiny is completely linked to TDI prices at the moment. Fortunately, the prices are down. They have been oscillating, but if I look at the prices right now, they are off the level of about 220 rupees. So there is a drop from the last numbers that you said, and I hope that this trend continues or at least stabilizes at this level.
That's actually a significant reduction. 220 rupees per kg compares to 243 rupees per kg. And maybe, it's probably the lowest that we've seen since Q4 of FY22. And correct me if I'm wrong. What does that do to your margins?
So eventually it will add or increase our margins. But, the various segments of products that we deal in, One are the B2B products, where of course the selling price is linked to the raw material prices. Costs a little back and forth on that. The other is the bedding side of the business, where the contribution of TDI to the cost of goods is much lower, and therefore it's a kind of a mixed bag. But there is always a little lag between the impact of these drop on the margin. It will be positive impacted.
All right, Mr. Gautam, there are reports that indicate maybe Sheela Foam is looking at inorganic growth. Would you like to clarify? Namely, the report mentions that you're looking to buy furniture rental company, Furlenco. Any truth out there?
So, intending to look and explore, there is total truth in that. However, we are far away from anything on the ground happening, but the process of evaluation is absolutely on.
So you're definitely interested in this asset, the furniture rental company, Furlenco.
Correct. So that helps us to make our little foray into the furniture side of the business, where a lot of our input goes into it. And it's a very fragmented market, so it'll be a small process of entry into that one.
By when will you take a decision on this asset? I
should say in about two months' time or so. One should have a clearer picture as to where we stand.
What is the status of your balance sheet, cash, debt on books, and how much are you willing to shell out for an acquisition?
So fortunately, we're reasonably healthy. There would be enough cash, almost, I may not know the exact numbers, but something like 750, 800 crores would be there on there. And the debt is relatively negligible. Of course, some places it does exist. If we include our outside subsidiaries of Australia and Europe too, some small quantities may be existing, but that is for those subsidiaries to take care of. And therefore, we're okay.
But what is the size that you're looking in terms of an acquisition? How much are you ready to let go of in terms of cash and books?
Look, it completely depends on the acquisition and where it kind of ends. But if we were the one that you talked just now about, I don't think we need to borrow from anywhere.
Okay, so what could be the ballpark size of it? If you could give us just a rough range. We know the target.
Yeah, it is still in very nascent stage, and therefore these numbers also keep changing and around.
Okay,
and in fact, it is a business where there is a PE fund involved. There are also fragmented shareholders who are existing. So we're just trying to put all that together and to see that how can we make an entry.
Would it be 500 crores plus?
No, much lesser.
Okay.
What kind of, is the business profitable that we're talking about, Furlenco? Is it profitable as of now? What kind of revenues do they do? We don't have those numbers of hand, so I just thought I'll ask you.
Correct. So on an operating profit, it is profitable. However, the loss is mostly happening on the financial side, and that once that corrected, we'll get straight away into profit.
Okay, and what kind of revenues did they do roughly?
So at the moment, that's a rental company, so of the order of about 200 crores a year. But the potential, look, that's not happening, or that's not growing because they don't have enough assets to lease out. The moment we get involved in it, that number could easily go up to about 400.
Okay, we'll let you do your due diligence and come to a decision on whether or not you'll go ahead with this particular acquisition. Just wanted to ask you a little bit about your two new brands which you've launched as well, which would probably be, between the range of 4,000 to around 9,000 rupees, which is Feather Foam and Starlight. What are the volumes that you're doing on these two brands? How much are you planning to probably scale it up by?
So these brands are primarily for supplying to the MBOs. As you would know that all our sleeper products are completely with the EBOs. And however, there are a large number of MBOs which we need to address. So we've introduced that a couple of years back. It's growing on a steady basis, but it's completely dependent on the the geographies or the number of MBOs that we go after. But it has a higher growth because the base is small and the universe is much larger.
Okay, all right. Final question then before we let you go, Mr. Gautam. This year, I think you're going to be ending with mid-single-digit growth. For the coming year, that's for FY24, given that the international business, the Australia business in particular, is going to grow in double digits. The consolidated entity, what kind of a revenue growth are you looking at without this inorganic growth? And also, what is the rough margin band we should be working with?
You're asking me to hazard a guess, but I would say what we would plan for, and as the situation stands today, we should be looking for a growth of anything close to 12, 13, 14%. And the margins should also be of similar levels, EBITDA margins of 13, 14%.
Okay, all right. Thanks so much, Mr. Gautam, for stopping by. We look forward to chatting up with you because we'll be interested to know how that inorganic growth is going to pan out. But we have got your intention as of now, and we'll wait for further update on that. Pleasure talking to you as always. For the time being, we slip into a short break. You come back and we'll focus on the markets and some stock-specific action.
Welcome back. Well, it is just about consolidating for the markets. The good thing is that the Nifty is holding above 17,300. So there's no real big move which is coming in for the markets at this point in time. We have the mid-cap index, which is managing to just about hold its head above the water. So up around 0.2% currently for the mid-cap index. Advanced decline ratio has been positive for the third consecutive day in terms of a trading session. So 4:1 is currently where the advanced decline ratio stands. Just talking about specific stocks, there are a lot of stocks which are seeing good amount of traction and are at fresh 52-week highs. So just want to point out Dr. Reddy's is just about consolidating today, but it is close to a 52-week high of around 4,681. So there's more stock-specific momentum within the entire pharmaceutical space. The other one is Manappuram Finance at 125 rupees. That stock is at a fresh 52-week high showing traction today. So that stock is up around 1.3%. And even a couple of others from the real estate space, Anand Raj, for example, is up around 2.5%. That stock too at a fresh high. Well, on that note, it's a wrap on Chartbusters. Stay tuned. Trading hour up next.